Welcome to the lounge and the indices report, and looking and starting with the S&P 500 here. It does appear that first of all, the move down from here, even though it pulled back down past the 61.8 retracement level from this wave to this wave here, it still stayed within the bounds of acceptability for a corrective wave, and we can count this move down here as a corrective wave. And to help confirm that, this particular move over here that's been up here for the last 3 sessions is an impulse wave. So we can look at this as being wave 1, back for wave 2, and then up for wave 3 and 4 and 5. So it does appear that we are now in a bullish mode, and this may reflect right through to the European markets, to the Australian markets as well, and other markets as well. So something worth considering. The move that we've been sort of tracking, sorry for being so messy here, but basically down for wave A here, cross for wave B, and we're looking for 5 waves down here in wave C, which we've got. And now we actually have quite a nice 5 impulse wave. An impulse wave is 5 waves to the upside here. So let's drill in and have a look at that. So what we're looking at here is a bit scruffy, I know that, but it's a bit simpler and smoother on the cash market if you want to have a look at that. But basically we're looking for 5 waves up through to here, and then we're looking for an A and a B and a C. The 50% retracement levels at 1950, and yes, but I can also, even though I've got this as an A wave here and a B wave here and a C wave over here, which would be obviously sort of a bit more shapely over here in perspective, but the thing is that this particular A wave down here, I've pulled this apart on the cash market on a 1-minute chart, and there is actually an ABC correction down through to here. So it is possible for this market to move straight up from here. If that's the case and you don't have a position, then get a position on support of 1972 and then add on 1980, or otherwise wait for a move back into 1950 area through here as the A, the B and the C wave through to here. That's that really, and that's obviously going to reflect through to the other markets. So looking at the Dow Jones as well, and just last time we were looking at shorting down to 16.7, and then we were looking for a retest back up into 1700 here. However, the move up through here is impulsive. So we're looking for, once again, the A wave, the B wave and the C wave through to here, and then look for support on 17,000. As soon as you see, and if you see support, tested support on 17,000, then get a small position, add on 17,050 and add on 17,100, because this particular move here that we're looking at through here, this would just be wave 1 here. So we'd be looking for wave 1, an A and a B and a C. If that came into play here, it may already be wrapped up in here, so you need to go support here. So wave 3 should take us up through to here, so we'll be looking at 17,300 as a target, and then wave 4 and wave 5. So that's what we'll be looking at through here. So that support, it all boils down to finding, in your own way, finding tested support on top of the 17,000 there. And this will reflect through to the DAX as well. With the DAX, we've still got 2 counts in the bigger picture. This is just the weekly chart here. It's plausible that we have wave 4 in play here, and then wave 1 up to here, and wave 2 back to here, and looking for wave 3 up here. The other count is all of this is a large triangle pattern here, with wave 3 here, an A and a B and a C for wave A, B, C, D and E here for a triangle pattern. Not that it matters that much at this stage either. So what we're looking, this is the triangle pattern here, a B, a C, a D and an E here. So finishing here and looking for a move up from here. So in line, moving with the S&P 500. So With that said, we can see that we're on a low here, and we haven't seen the same move that we've seen with the S&P 500 and the Dow Jones and so forth. So we could see that the DAX is in a situation where it's not going to lead; it's going to play catch up and follow up. So if the S&P, which it should do, continue in the upward direction, then we'll see this market find support and then start to catch up quite quickly. So my suggestion is that on 9,200, look to go long, but look for support on that particular number, and then look to build in from that. But we would be looking for a much longer trade to the upside. So definitely building in on 9.2 and 9.3. You might want to hit it at 9.250 as well, the halfway point, and 9.3 and 9.350 and so forth, and then add on top of 9.5. So let's see how we go with that. But as I just mentioned, we need to see support, tested support on 9.2. It may not come for a little bit, maybe two sessions or so, but that's what we're looking for from wave B here. We're looking for 1, 2, 3, 4, and 5. It does appear that there can be another low here, but well, maybe not. That might be the impulse wave here on the 15-minute chart, but I wouldn't bank on it. That's the saving grace, the 9,200. Okay, so if you don't get that, don't go long, because we'd still have another it looks like there is another push to the downside here when I'm looking at from this point here, 1, 2, 3 and 4 and 5 here. So anyway, we'll pick it up down here, but if we do get support on this level here, then clean a small position, and then on 250, then on 300, and then 350 as well. We'll work to the upside there. The FTSE's the same as well. In fact, the FTSE's been much more like the S&P 500, because you can simply see that we've got this move up through here, and being above this particular number here is important as well, the 6,500. It's a medium level there, and obviously we're developing support there. So it does appear that we've got an impulse wave up through here, so it's likely that we're going to be retesting back through here. But once again, you can also look to go long in this market, basically buying pullbacks, just get very small positions on the pullbacks, and then if it builds up into this area up through here, then we can look at that. But look at this as being 1, 2, 3, 4, and 5 here, and then an A and a B and a C here. If you're going to drill into that on the sort of 5 minute, normally you look at like you look at a 4-hour daily chart, a 4-hourly chart, and then an hourly chart's quite helpful. But when you're sort of drilling down, I find 15-minute chart quite helpful, and then the 5-minute chart to really sort of nail the internal wave count on those things. The Australian market, we've got an RBA rate announcement at 2:30 today, so that may have a little bit of impact on things. Once again, here we can see that we've got 5 waves up through here. Now I've got this labeled as a wave 4, and I'm doing that because it's quite possible that it is, in terms of a little A, B, C here for the A wave, a B wave here, and a C wave here, and it can just unfold from here. If that was going to be the case, then we would see a move, would see the 5272 become the retested resistance. But while the market is above this particular number, and also above and trying to find support on 5.3 here, then we need to look on the long side for this. Okay, now I don't know which is the correct move here. That they both seem, this is the low here, and we do have 5 waves up through here, but at the same time this still can be a corrective pattern here in terms of the A wave, the B wave, and the C wave here. So we just need to be careful that if that number there becomes the retested resistance, not trading through it or spiking through it, but tested resistance, then you need to be on the short side. But while it's above that, we can be on the long side. Looking at obviously the banks are going to be sort of leading this, and with the banks, this is the CBA here, and just on the daily chart here, situation so far is that we've had I've counted 5 waves into this little move through here. So that could be wave 1 or the A wave for a correction, then an A and a B and a C for the B wave here. And then we do have a nice 5 wave structure down here for wave C or wave 3. Now, if it's wave C here, then we're going to see a bullish run here, and then this will be in line with the S&P 500. Okay, now the second thing here is that if that's not the case, then we would be looking at a bearish market, and this wave C down here, instead of being wave C, it would be wave 3. And wave 3 down here, this would be wave 4 coming back to the 38.2 retracement level. So we can say roughly 77 here, basically where it is now. So we may see the market from this point here make new lows here into a 5th wave here. Then we've got 1, 2, 3, 4 and 5. And as I've mentioned before, that if we do get this 5 waves here, if that is indeed the case, then we've got a much bigger bear market on our hands at that stage. Because if we get 5 waves here, and I know I've said this before, but if we get that 5th wave down here, we'll get some sort of ABC correction back here again, and then we'll get another 5 waves like this one here. We can just tack that over here, and that would be for sure. So 5 waves down here, gives us a much bigger picture. So, but at this stage, looking at the US markets, and it's not that like we follow the US markets that accurately anymore, but we do have that in the US markets. We do have that 5 waves up here, and we're getting this already here anyway. So it's quite possible that we've got this, and we're playing for this as well. And it will be the banks that lead out of it. So we don't have a leader to follow. We can only look at the other global markets as such. And if they're going to push up, then we can see the FTSE. That's really important. The FTSE and the Australian market, they have a sort of relationship. We can see 5 waves up on the FTSE there. And this would be the same for, I was looking at ANZ as well. It's a bit of a different picture for ANZ. This is just the 2-hourly chart here. But from the top up here, we can look at this as being corrective as an ABC for an A wave here, a B wave here, and a C wave down through to here, with 5 waves moving up through here. So we can expect, with this market here, we can expect a bit of softness to come into play here, an ABC back, and then a move up here. Because we've got 5 waves here, we should get another 5 over here, but I'm hoping that this is going to give us a more of a bullish picture. So we have entered long on some banks, as you may have noticed on the Monday there, and tightening up all the short positions as well. But I don't know if this is going to be the case, or we're just going to get a larger wave 4 here and then down. But I think looking at this particular structure here, especially this first bit here, it could be down, that we've got down for 1 here, back for 2 here, and then in a smaller degree we've got down for 1 and back for 2, and then we've got the like even another wave 1 or a third wave down. So it is possible to still be bearish, but we just got to just playing what we sort of see, and if it is going to push up, we need to be onto it in a small way. So that's what we're sort of looking for here. Right, so that's that. So in terms of actually trading this ASX 200 CFD here, then simply being above 5272, then you need to be holding long positions, and look to add on 53 here. And then also, if the market looks a bit bullish, then scale in through 50, 53.10, 53.20 and 53.30. If you can see that at some point we're going to get support or take this high out here, support on 53.30, then you know you're going up from that point. So it's good to get a few positions into group 1 here, and finding support on 53.30 is a saving grace to moving higher. Yes, that will get you to 53.50, but in this particular case, it would be eliminating this particular correction here, and then I can move wave 5 into this position over here, but I just don't want to do that just yet because it's not confirmed. I think it is the case. Yeah, so we're basically just going to be following the US markets to the upside, and the FTSE hopefully will follow that, and we'll follow that, and these are the numbers that are important to us at this stage, and we need to be on the right side of these, and that's what we're doing. So basically being long from that point there. Alrighty, that's it. Thanks for tuning in. Cheers.